Hello and welcome to the Orlando Real Estate Buzz. I'm Brendan Rendo with the Homes in Orlando team. And thanks to some of the things going on today, Joe's not going to be able to join us. We've got a lot of news going on, some things really kind of mixing up the mortgage world. Um, we've got the um, new head of the Federal Housing and Finance Agency putting out some memos this past week, changing up some things without too much notification to anyone. We've got the pending home sales numbers came out, as well as the new home sales coming out as well. So we're going to get into all of that. Thank you for joining us. And we're going to start right now is with Bill Pulte, the new head of the Federal Housing and Finance Agency, came out through X actually and put out a couple different memos uh, in the past week, one on the 25th that has really kind of put the mortgage industry on their heads because there was really no directive for him. And basically what he did, hold on, I will find it. Here we go, right here. Is he issued this directive, and basically what it does is it terminates what's called the Special Credit Purpose Program. If you're not familiar with the Special Purpose Credit Program, it's a basically a down payment assistance program that allows the lender themselves to actually help with the down payment and closing cost assistance for clients. Joe and I had actually used it last year, and it worked out fantastic for my client. What it was designed to do, this particular one, is allowed someone who was in a lower income zip code to move to a more desirable zip code. And in doing so, the lender would provide them roughly, I believe it was about a $5,000 credit that could be used for closing costs, down payment, anything, you know, that would normally be associated with the closing costs of a loan. And it's helped a lot of families overall. Well, on the 25th, just 2 days ago, Mr. Pulte came out and said that nope, the program is no more. And the program's no more because they're saying as the um, conservator, because Fannie Mae and Freddie Mac both are still in bankruptcy, which is kind of amazing since they started bankruptcy back in 2008, that they haven't actually come out of bankruptcy yet. And they are actually both profitable organizations. So there's really no reason for them to still be in conservatorship. That I think really has to be addressed and addressed quickly, because I don't understand why they're still in conservatorship under bankruptcy when they are showing profitable um, profitability on their books and have actually for the past several years. So it really doesn't make any sense. But what this directive has done is it basically gave no direction to the lenders themselves. So they don't know if it was cut off that day immediately. Any loans in the pipeline, which I know Joe has several right now, are going to be allowed to be closed, and then they close out the program. A lot of times with these types of programs, what they'll do is they'll allow, roughly about a 30-day, 40-day window to allow these to get closed. They'll not accept any new ones, say as of the 25th. But if you're in the middle of processing a loan, you think they would give them the ability to finish out these loans. But within the memo itself, he gave no directive whatsoever. So that's put really a lot of the mortgage industry um, kind of on its head, trying to figure out how to finish up these loans. Um, Not the best way to do it at all. Uh, Mr. Pulte, everything I've read about him and know about him, he's always been seemed like a very, very good guy, um, very caring. But in this situation, I think he's made a little bit of mistake and could have given more direction to the overall process. So that's what's happening. He's also put out some other directives since taking office a couple weeks ago. So a lot of changes going to be coming through in both Freddie and Fannie, um, and how they're handling things differently than the previous administration. Some I think are really good. Some I'm not so sure about. So we'll see how this all washes out, and we'll keep you up to date on the availability of these programs coming down the road. The next thing we're going to look at is the pending home sales came out today, and this was kind of a nice little bright note with all the news that's going on. In that pending home sales overall throughout the country increased roughly about 2% in February, which is good because January was a very slow month. One of the best things, though, is that when you look at it by areas, the Florida, which is in the south section, our month over month pending sales actually grew 6.2%. And we'll see that a little bit more in the numbers as we look at the Orlando regional um, numbers that come out on a weekly basis. And you're starting to see it. There's other things that you're going to note in the numbers as we look at them of how things are picking up a little bit. Feeling a little bit better overall about the market. Seems like the spring season has started to hit, and there are people out there. There are people who are looking for homes, and there's actually sales going on, which is great to see. So when you look at it graphically, you can see from January of this year with the current single homes, existing home sales, we had dropped up to roughly about 3.6 million as far as projected sales for the year. And with pending sales jumping in February as they had, we actually increased closer to almost 3.9 million. That's a good jump overall. I think as we see the spring season continue to heat up a little bit, people getting out there, weather getting extremely nice. Um, that we're going to continue to see this. It'd be nice if we can actually see this number start to project to over 4 million, maybe get up there to around 4.2, 4.3 for the year. That that would be really nice to see. Um, the other thing we came out with numbers this week, whoops, is new home sales. Our new home sales projections were roughly about 676,000 for the year. So that's also up a little bit. Um, and the current number for sale, we're at 500,000 new homes on the market for sale right now. And we've seen a little reprieve in the average price or median sales price. It's dropped to roughly about $414,000. That's down, oh, couple percentage points overall. The one big thing that you do see is that we still have an 8.9 month supply of new homes. And we're starting to get even more incentives coming in through the builders. I know there's a couple builders that had done the buy downs, 30-year buy downs were up, generally 4.99%. They've actually adjusted those even a little bit further now to where they're doing what's called a 2-1 buy down, where they're actually buying it down. They're buying it down now for the first year to 2.99%, the second year to 3.99, then locking you in for the final 28 years at 4.99%. So that cost is going to actually increase from previously. Speaking to one of the local builders recently here in the past week, that cost for those types of buy downs are averaging about $36,000 per house, which is a tremendous amount to continue to keep sales moving. So there's a lot of incentives. One thing is you're starting to see builders trying to adapt their incentives to their buyers. Give me an example. They could offer this program with 2.99, 3.99, 4.99, but a lot of buyers don't have the funds for the closing, not the down payment, not both the down payment and the closing costs. So maybe what some of them are doing is, okay, we'll just lock you in at the 4.99, where their builder's cost may be about $28,000, and giving them an additional $7,000 to $10,000 in closing costs. So there's a lot of different ways to look at it, a lot of different ways that we can work with builders to still get people into the houses and to be able to lock them in. Almost all builders right now, and at that roughly 5% mortgage rate, which is almost 2% less than we're at currently. That's a great incentive for a lot of people to look at the new construction homes that are out there right now, especially with what we're seeing in treasuries recently. Over the past couple days, we've actually seen where we were sitting down around 4.25, 4.23, but with the tariffs coming starting April 2nd, we've seen over the past several days, we've seen that start to creep back up. So we're actually hitting roughly the mortgage rate highs that we've seen over the past 2 months, because we've actually jumped on the 10-year to about 4.36 overall. And that's slowly crept up the mortgage rates, and we're seeing those starting to sit around 6.8% again, as you can see here. So they're holding steady. We're in a window. We're kind of going between 6.5 on the low side to roughly right around 7% on the high side. So that's the range we're kind of sitting. Um, it'll be interesting to see once the tariffs take effect next month, or excuse me, next week, April 2nd, um, how things change a little bit, even more. So not really sure which way it's going to push the market. Um, that's really kind of a watch and see scenario overall. Is where is that going to hold the market? So that's what we've got going on economically and within the mortgage industry. So a lot of things, you know, there's a lot of good things we're seeing in the number of sales, slowly but steadily starting to pick up. Um, but a lot of things that are going to be changing possibly on the mortgage side with the new head of FHFA, Bill Pulte. Uh, he's got a lot of experience. If you don't know, he's actually was the head of Pulte Homes for a very long time. Um, so he's got a lot of experience in the home industry, very well versed, very well spoken. Just I think a good overall person. I think to handle that. I'm curious to see what they try and do with Fannie and Freddie, if they finally try and get them out of receivership and actually turn them completely private. That's that could be a big thing that happens over the next maybe year or two, with the Trump administration. So that could be an interesting one. So we'll see how that plays out. And then once we get into our local numbers, our these are OR's weekly numbers, and we'll see that the numbers actually are pretty good overall for the past week. We've had an increase in sales up to 390, which is excellent. Interesting enough, the median single price, we're sitting at fluctuation, between 400 and kind of 430, goes up and down a little bit every week. We're down about 3% this past week, but our inventory is also continuing to grow. So that's the spring. That's people who've been waiting, getting closer to the end of school, ready to start putting their houses on the market, start planning for, when school is done to get to sell their home, make their move. So we're seeing a bigger variety, more homes on the market. Our condo market's still sitting kind of flat, just really, really flat. And our inventory continues to increase. And we're going to see something very interesting that's happened to the condo market over the past 2 weeks in these numbers. And now when we break down and look at the actual individual numbers overall, you still see that we're sitting at roughly about 5 months of inventory overall, 8,396 homes on the market. This is interesting because this has dropped a little bit. The original to final list price, it was roughly about $15,000, 15.5 adjustment. So our percentage from the original list to sales price, right around that 94%. That's been rather consistent, 94, 95% overall. The higher end homes finally have kind of had a rebound because they were sitting down around 88%. I think they had dropped. One of the lowest weeks was roughly around 87%. So you've seen that. And then we look at our average days on market and we see compared to the past several weeks, that's actually a huge drop. We've dropped roughly about 10 days for the average days on market. And again, that's due to the springtime, more people out. We had a couple open houses over the past weekend, and really for the first time in probably 2 or 3 months, we had an extremely good turnout at both of the open houses. Where normally, we were getting maybe 2 or 3 people. We had 9 to 10 people through each house each day. So that's nice to see. It tells you that people are out there. People are starting to search, not making their decisions real quick, but they're out there and they're searching. And you can see here over the past month, we've consistently stayed above that 337 median. So this is continuing to stay steady. Love to see this jump up to a consistent over 400 homes. Now that we are in the springtime market, um, spring break. I know for my kids here in Seminole County was over last week. I believe Orange County is this week. Which is always a good time for families to get out and look at houses as well. So love to continue to see this continue to rise, the weekly sales numbers. And then you see here our inventory, again, continue steady growth of inventory, homes on the market, which is again great for the buyers. But up here, you'll see we had gone from staying steadily in the 70s days on market. We actually dropped for the first time in several weeks to below 70, an average of 70 days to 69 days. You can see it graphically how it's come down. That's telling you that for sellers, there's more people out. If you're thinking of putting it on, now is a great time. They say that the second week of April is the best time to sell your house. Let's see. We'll see how the numbers turn out. Then we get into condos. The big number I wanted to show in condos is here. And what this is active foreclosures. And you'll see that we've taken a pretty good jump from to 11 and 12 foreclosures in the past couple of weeks. And you can see graphically how that has gone up. The red is our short sales, and the blue is our foreclosures. So you're seeing that the foreclosures and the short sales in the condo market is starting to pick up. I expect that to continue, specifically because of all the changes, all the increased HOA fees that have just really kind of decimated the overall market. So it's going to be rough going for a lot of them. We've seen the home values of the condo market just consistently decrease as well. So there's a lot of people trying to get out, but not a lot of people interested because when you look at the overall cost um, with the mortgage and the HOA, it doesn't make sense compared to actually even purchasing the townhome. Uh, the townhomes become more attractive than the condos themselves. So that's something to continue to watch as these numbers go over the summer with the continued decline in the condo sales and the real stagnation. Are we going to continue to see the numbers of foreclosures and short sales increase here in Orlando? Well, thank you all. I appreciate your time, and please join us every week on the Orlando Real Estate Buzz. I'm Brendan Rendo with the Homes in Orlando team. Thank you so much. Bye bye.